is this thing deductible? Is it deductible for me to go on a particular trip? Is it deductible for me to buy a certain item? Well, a better question to ask is, how can it become deductible? Because almost anything can be a tax deduction if you know how to ask the right questions. This is where it pays, literally, to have a good accountant who's a tax advisor who can tell you what's going on and how you can use your money, that way you have less taxable income legally while you can still buy all the things that you want. So, for example, one of the things that's going on until the end of 2022 is the tax code is giving bigger tax breaks for business owners that are eating out at restaurants. So if you go out and you take your employees out to eat, you get a 100% tax break until the end of 2022 as a way to incentivize people going out to eat at restaurants, as a way to help stimulate the economy. So if you have people on your team, or if you are a side hustler, if you're a business owner, you have the opportunity now to get a tax break for eating out at a restaurant. We here at the Minority Mindset Companies went to a hybrid style work office after the pandemic hit, which means that people come in the office when they want. You can work from home whenever you want. But once a week, we do something called Team Day, where the team comes into the office, and every week in this Team Day, we go out to eat at a restaurant. Now, we didn't start doing this because of the tax break that we were gonna get. We did this for fun, but it's kind of a nice bonus that 100% of the money that we're spending at the restaurant is a tax break on my taxes. Let me give you another example. If you're watching this video when it goes live, I will be on a 2-month business trip travel where I'll be staying in San Diego with my business partner, working on a whole bunch of different things. I'll be meeting with a bunch of different business owners out there, doing some interviews, meeting some influencers. So doing work out of San Diego, I'll be living in an Airbnb with my business partner. And I should also mention that my business partner is my wife. This is a tax deduction, and it reduces my taxable income. Now, you might not be able to reduce 100% of every dollar that you spend, but if you have a good tax advisor, if you have a good tax accountant, they'll be able to help guide you and show you how you can spend money and have that money be a tax deduction. Now, the money has to be spent in a way that benefits your business, but if you are a true entrepreneur, a business owner, a side hustler, guess what? Your life a lot of times is your business. And so you have to understand how you can use this system to your advantage. That way you can legally pay less money in taxes. Because remember, the IRS is just a rule book. You want to make sure you understand how the rulebook works, that way you can use it to your advantage. Now, what if you're completely not an entrepreneur? You hate the idea of starting your own business, you hate the idea of being a side hustler, you love the security of your job, and you can't leave that. You have to just work a job. And now what do you do to get some of these benefits? Now, obviously, one of the things that you could do is invest your money yourself, because when you invest your money, you get natural tax breaks, because investment income is a lower taxed income than your job income. But the second thing that you can do is through real estate. Let me show you one of the reasons why rich people love investing in real estate. So let's assume that you go out and you buy a property for $1 million, and this property generates cash flow of $70,000 a year. That means you buy this property for $1 million, then this property generates rent, because let's say it's an apartment complex, people pay rent, now you have to pay all your expenses, you have to pay taxes, you have to pay insurance, you have to pay your management people, you have to pay your maintenance fees. After all those expenses, you are left with $70,000 in the bank. Now, chances are you probably don't have $1 million in your checking account to go and buy this property cash, so you'll have to go to the bank and get some debt to buy this property. Now, what you're doing is you're using debt to buy income. And in order to do that, you're gonna have to come to the closing table with some cash. So the bank might give you $800,000, and you'll have to bring about $200,000 to the closing table. Now, if you don't have all $200,000 yourself, this is where you'd have to go out and network with some people and go out and raise this $200,000. So you have $200,000 of equity, $800,000 of debt. Now, what happens is you're making $70,000 a year of profit, but you still have to pay your debt. So you'll have to pay about $52,000 in debt, which would leave you with $18,000 of net income after your debt payments. So now this $18,000 is left in the bank account after all of your expenses are paid, but you don't have to pay taxes on all $18,000 because you invested in real estate. Real estate offers some of the most favorable tax breaks that our tax code has to offer, because they offer something called the depreciation deduction, which says that every single year you get to depreciate the value of the building on your real estate. So let's assume that 20% of the cost, so $200,000, is the cost of the land of what you bought, and the other 80%, the $800,000, is for the actual building, the actual apartments on the property. Well, if it's an apartment complex, you get to deduct 1/39th of that amount, so 1/39th of $800,000 every single year over the next 39 years. That means you will get to take a deduction of right around $20,500 every year for 39 years, which means you have a loss of $2,500. Now, you gotta understand what this means. You have $18,000 in your bank account. This is money that you can spend, but you get to go around and tell the IRS, hey, I made $18,000, but I get to take this tax break, this tax deduction for $20,500. So you have a tax loss of $2,500, which means you owe $0 in taxes, because remember, you only pay taxes on income, and to the IRS, you have no income. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.